Canadian workplaces and communities are rapidly changing. For Morguard Real Estate Investment Trust, we see this as an opportunity to re-envision together. It's the reason we are focused on strong asset management across the country. Our goal is to address the needs of our current tenants and anticipate the needs of future tenants through ongoing investment and development. Our approach is to rethink, repurpose, and reimagine our properties to create vibrant workplaces and shopping destinations in every community we serve. ', 2017 was a challenging year, given slowdowns in the Alberta economy and the retail sector overall. However, the diversity of our portfolio helped to minimize its impact. Total revenue from all real estate properties remained fairly constant at $279 million. Net operating income was $157 million, 2% below 2016. The Trust remained focused on delivering a number of innovative development and leasing initiatives, which will ultimately further diversify our revenue stream and increase revenue overall. We are now starting to see positive results from our efforts to actively intensify a number of properties. The Trust's strategic goal is to help ensure a stable and increasing cash flow over time. Our diversified holdings support this strategy by eliminating the Trust's exposure to any one asset class or industry. The Trust's portfolio includes retail, office, and industrial properties in 6 Canadian provinces, a total of $2.9 billion in real estate. Our retail portfolio includes full-scale enclosed regional shopping centers that are dominant in their respective markets, and community strip centers, mostly composed of food retailers, discount department stores, and banks. With these 2 broad categories of retail assets, we can have a wider tenant base, reducing exposure to a single type of retailer. Our office portfolio is made up of single-tenant and multi-tenant properties across 4 provinces. The single-tenant properties help to stabilize our revenue stream, as most are under long-term leases to major corporate and government tenants. Our multi-tenant properties have well-distributed lease expiration dates so that we can benefit from increased rental rates when leases are renewed or tenants replaced. Finally, our portfolio is further diversified by our interests in 5 industrial properties located in Ontario and Quebec. We always seek to derive the greatest value possible from our portfolio by applying forward thinking to enhance, refine, and redevelop our properties. 77 Bloor Street West in downtown Toronto, for example, was upgraded and modernized, increasing the leasable area, the rental rates, and the value of the property overall. With the rapid changes to the Canadian retail marketplace, the Trust is now actively adding new and innovative services to our properties. We are intensifying to increase our gross leasable area and to deliver new sources of revenue. And we are remerchandising space to increase revenue from the same gross leasable area. These efforts are bringing in new tenants and services, enhancing the tenant mix, increasing foot traffic, and growing retail sales. Shoppers Mall is one example of the Trust's remerchandising efforts that have benefited tenants and serviced the surrounding community. The mall was revitalized with a whole new retail and services mix, including fitness facilities, a pharmacy, and additional restaurants. Overall, the Trust's initiatives will reactivate 654,000 square feet of gross leasable area and also increase gross leasable area by an additional 139,000 square feet. In 2017, after an investment of $53.6 million, 79,200 square feet of new space and 211,500 square feet of remerchandise space became revenue generating in 4 of our properties. By the end of 2017, redeveloped space was generating $1.2 million of net operating income per quarter. Since the Trust's inception, we have continually made regular monthly cash distributions. For 2017, the monthly distributions per unit were 8 cents for an annualized total of 96 cents per unit. Overall, the Trust's distributions for the year were $58.2 million. To set distribution levels, the trustees closely monitor the cash distributions to basic adjusted funds from operations to ensure funds are retained for reinvestment. For 2017, the Trust's payout ratio was 77.4%. Prudent management of our capital is always our objective. This means having an appropriate ratio of debt to total assets. The Trust's debt ratio at December 31st, 2017 was 44.5%. With high-quality commercial properties, responsiveness to tenants' changing needs, and a focus on reinvestment, Morguard Real Estate Investment Trust is committed to re-envisioning together. The result: we are not only creating vibrant workplaces and shopping destinations, but strengthening our portfolio to provide steady, dependable returns for you, our valued unit holders.